This is King World News. I'm Eric King, and you're about to hear our exclusive weekly metals wrap with Ted Butler. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we have an incredibly powerful interview with Jim Rickards, who has over 30 years' experience in global capital markets. Mr. Rickards has been a direct participant in many of the most significant financial events over the past 30 years, including the 1981 release of U.S. hostages in Iran, the 1987 stock market crash, the 1990 collapse of Drexel, and the LTCM financial crisis of 1998, in which Mr. Rickards was the principal negotiator of the government-sponsored rescue. Also, there is an outstanding interview with billionaire Wilbur Ross, who discusses the financial collapse, opportunities he sees as a result of the collapse, the real estate market, and so much more. Also, we were fortunate enough to have Henri Barguigian, who is the CEO of Graf, the House of Graf, the largest fine jeweler in the world, discussing the move to hard assets globally, and who gives us insights into the minds of the wealthy and what they are not only doing with their money, but what they are communicating to him as well. All three of these interviews are great for people who are following the gold and silver markets. Joining us now is Ted Butler. Ted, what about the action this week in the metals and gold and silver? I mean, we had some more downside action. Are we cleaning things out? What does the commitment of traders look like?
Hey, Eric. Yeah, we're undergoing the process of cleaning out. This commitment of traders report that just came out did show an expected decrease in the net dealer short position. The dealers bought back shorts and the technical funds liquidated long positions. Pretty decent amounts. I thought there was going to be more in silver. It was 7,000 contracts in net for the week, which was, even though I had expected it maybe to be a bit bigger of a decline, it was the biggest decline in like a year and a half, so it wasn't insignificant. Kind of the same thing in gold. We had 25,000 contract reduction in gold for the week, which is the biggest weekly reduction in gold going back to, say, last April. We're sitting now with the net dealer short position in both gold and silver at the lowest levels since the very beginning of September. So we have improved, and this was, of course, as of Tuesday, the cutoff day. We've had much weaker price action, particularly in silver, since then, and heavy volume, and we've had more liquidation since then. So extrapolating since the cutoff on Tuesday, it's gotten even better. Better means they've liquidated and washed out the technical funds, come with a lot of pain. We weren't down as much price-wise this week in silver and gold as we were for the prior week, but it was more painful. The cumulative effect of prices going down gets people demoralized. That's the game. They're trying to demoralize and flush out as many people as they can. They've done a good job on it, say they being the commercial shorts. J.P. Morgan, or the very biggest shorts, didn't cover as many contracts as I thought that they might. In silver, the smaller commercials, I refer to them as the Raptors, Velociraptors, kind of stepped in front of them and picked up some long positions. They were chiefly responsible for most of the decline in the commercial short position. But the question is, are we done? Nobody knows that. We're gone through almost all the moving averages in silver, with the exception of the 200-day, which sits about 50 cents below the market where we closed today. Could they do that and knock them down there? Yeah, you can't rule it out. It's not necessary. It's not guaranteed that they will. But to answer your question, we are very much in the flush out of the technical funds. It has loomed in this market for months, and we're seeing it done now. When we're done with it, it's going to be a great position. Are we done with it now? Not sure. We're getting there, though.
And what about the physical market? What are you seeing there?
Well, I mean, it's easier to track for me in the silver market, and that's the crazy thing about it. The physical market shows absolutely no signs of diminished demand, as we talked about last week. In fact, they updated the Silver Eagles, the U.S. Mint, for this week. I don't know if there's going to be one more today. Today's the last day of the month, but wherever we are, 3.6 million roughly for the month of January, it's an enormous, stupendous number of Silver Eagles being sold, and it's the biggest monthly total in 23 years for the Silver Eagle program, right to the very beginning. And this monthly total in January is more Silver Eagles sold this month than was sold in the entire year in 1996, and close to what was sold for the entire year of 1997 and 1998. So it's really a big number of silver eagles that were sold. It accounts for more than 100% of all the silver mined in the United States for the month of January. All went to silver eagles, and that's just incredible demand for retail demand for silver bullion. In addition to that, in the big ETFs, both in gold and silver, on this pretty big price decline that we've had over the last 7-8 trading days, there has not been 1 ounce of metal that has come out of either the big GLD gold ETF or the SLV, the silver ETF. In fact, in silver, they actually added 1.5 million ounces to the total, a little over 301 million ounces now in the silver ETF. And the reason I'm bringing it up is that it's not development's weakness in the physical market that's accounting for the price weakness. In fact, it's just the opposite. There is no evidence of selling in the physical market. It's evidence only of demand. So what the heck is the price doing coming down the way it has over the last 7 or 8 trading days? And it's clear. It should be clear to everybody. This price action that we've seen is all due to shenanigans on the COMEX, the Commodity Exchange Inc., the futures market. It's a case where the paper market is clearly dictating the price of silver. This game between the commercials and the technical funds has gotten to crazy extremes now, to where it has absolutely nothing to do with what's transpiring in the real world of physical supply and demand for silver and for gold as well. And it's a glaring red light that says this is not the way it should be. The futures market, the paper market, is supposed to follow or discover prices. It's not supposed to set prices for the physical market, yet that's exactly what's happening. And it's just a shame. It just should not be this way. It's such a glaring example. You can't call it anything but manipulation.
What about any further CFTC developments?
Well, in light of all these things that are going on, I wouldn't call them developments, but I would say that 2 strong feelings about the CFTC watching what's taking place this week, as I indicated in a couple of notes to subscribers this week. On one hand, I'm annoyed and disappointed in the Commodity Commission for allowing this obvious manipulation to go on. I just want to reach through the phone and just choke them. I think the words I used in the note to subscribers today is that I just want to smack them upside the head and wake them up to what's going on. It's deplorable that they're not acting against this obvious manipulation. It's just black and white. On the other hand, they have announced this precious metals meeting, which is a major, major accomplishment. It only took place because so many readers wrote in and demanded that there be some action in this silver manipulation, and much to the Commission's credit, they are responding to public will, it appears, and I'm very hopeful. There's a meeting scheduled for March. They don't have a date yet, that will be able to air these issues fully and get some kind of resolution. So on one hand, I'm annoyed with them. On the other hand, I'm really happy to see that they may be giving us an opportunity, an incredible opportunity to straighten this situation out and open it up to what's really going on.
And I understand you're going to be speaking at the Phoenix conference again this year.
Yes, next Thursday and Friday, the 4th and 5th of February. I don't travel much. I did go to speak at this show last year, and I'm going to be doing the same this year on both Thursday and Friday. If any listeners in the audience are nearby or can find their way, I'd love to meet them. So, yes, thanks for mentioning that, Eric.
And as always, we will have a link to your newsletter so that people can sign up or subscribe to that if they'd like to do that right on your interview page.
Great.
Thanks for joining us, Ted.
Hey, thanks a lot, Eric. You have a good weekend.
Thank you for joining us at KingWorldNews.com. Be sure to join us next week where we will have more interviews with the top people in the world.